Good morning, everyone. I hope all of you are doing well. And today we start with the next standard in the simple standard series, as I would call, that is in days 38 on intangible assets. I hope you are able to see my screen and the audio video is clear. And if you're good to go, we will start. So when it comes to Index 38, again, very closely linked to Index 16, just that Index 16 talks about tangible assets, Index 38 talks about intangible assets, right? That is one broad difference, of course. Now, if you have understood Index 16 well and if you have revised it well, a lot of things here understanding would be much easier. But yes, there are some specific aspects which we need to be clear of, and these are tested again and again in the examination, and we'll put slightly more emphasis on that. Now, when it comes to Index 38, it talks about intangible asset, and the definition of an intangible asset is an identifiable non-monetary asset without physical substance. So, it has to be identifiable. Identifiable means you must be able to separately identify that yes, this is the particular intangible asset, and if I am separately able to identify, which also means I must be able to maybe sell it independently to a third party, or if it is arising out of a contract, I can clearly say this is my specific right, this is the specific asset I am talking about, and hence that is identifiable. So it has to be identifiable non-monetary asset, means which is not, the value is not determined, or is not, the value that you will get is not determinable in terms of money. So when I say monetary asset, there the value of the asset, the monetary value of that asset is fixed. A monetary asset has the value of the asset fixed. For example, customer, a customer has to pay me 1,000 rupees. That 1,000 rupees is fixed. Whereas when we talk about non-monetary asset, that amount is not fixed, or it is not determined. It would be more, it would be less. Inventory, property, plant and equipment, investment property, intangible assets, all of these are non-monetary assets. So first thing is, it has to be identifiable. You must be able to say, okay, this is a particular separately identifiable asset. For example, trademark, for example, patent, these are identifiable, and it should not have physical substance. If it has physical substance, it becomes tangible. If it doesn't have physical substance, it becomes intangible. Now, in a lot of cases, what happens is these intangible assets are kept in, let us say, a CD or a patent which comes as a certificate of physical paper. Just because it is a physical paper, we should not say I can see, I can touch it, and hence it is tangible. That physical paper is just a medium to hold the intangible asset, just to carry that intangible asset. That should not be considered as intangible asset. So it must be identifiable separately from other assets. When we say identifiable, separately from other assets, copyright, trademark, patents, licenses, you can separately identify them, and that becomes a intangible asset. Now, very important discussion here is goodwill. Goodwill of a business cannot be separated from the business. For example, if I sell the goodwill of a business, it is as good as I am selling of the entire business, right? So goodwill is not identifiable, and hence goodwill is not within the definition of intangible asset within Ind AS 38. I am not saying goodwill is not an intangible asset. Goodwill would come into picture, for example, in business combination and all of that. But for Ind AS 38, you will not separately identify goodwill, or you cannot separately identify goodwill and recognize that as an asset, right? So intangible assets could be your trademark, the brand name and all of that. Then a newspaper masters, the title of the newspaper, internet domain names. So today, for example, if you have to check the value, you can check the value of a website online. The domain name has some value, so that you can get it checked. Then there would be customer list, customer contracts, customer relationship. Now, all these intangible assets need not be recorded. These are intangible assets, but all of these need not be reported or may not be reported for the purpose of Ind AS 38. Okay, so customer list and all will specifically come to it. Then you can have patent, database, computer software, and all of those related aspects. Now, as I was mentioning, it should be identifiable to distinguish it from goodwill. So goodwill is not separately identifiable, and hence, because it is not separately identifiable, you will not recognize goodwill, especially the internally generated goodwill as per Ind AS 38. Now, for identifiability, an asset is identifiable if it is separable. Separable means you can separate that asset independently, sell it to others, rent it to others. That is when we call it separable. Now, goodwill is not separable. As I told you, if goodwill is, if you sell goodwill or if you transfer goodwill, it is as good as the business has been sold. So, it has to be separable, or it arises from contractual or other legal rights. Now, arising from contractual and other legal rights mean, for example, a telecom license. A telecom license arises from contract with the government, okay, or the government gives us some legal rights to operate in a specific area for which we may pay the amount. We use telecom licenses, we have import licenses. All of these arise from contractual or other legal rights. Okay, so very important, two important keywords. It must be separable, or it must arise from contractual or other legal rights. Even if you cannot transfer or separate from the entity. For example, if I say Airtel has a telecom license, if Airtel sells the telecom license, it is as good as the business has been sold. But because it is arising from contractual, right, that we can call that is it is identifiable. So for identifiability, either it must be separable or it must arise from contractual or other rights. Then we discussed it must have non-physical substance. Now sometimes what happens is you buy hardware and software together. You buy hardware and software together. Now when you're buying hardware and software together, and if it is coming as a bundle, you will recognize as a hardware or property, plant and equipment, and not the software related aspects separately. But if you have purchased separately, computer separately, software separately, then computer is separate, software will be separate. So you have to look at the circumstances. Now, when do we recognize an intangible asset? Same thing we learned in 1640. Here also the same thing. There must be future economic benefits, FEB, and the cost must be measured reliably. So for identifying an intangible asset or recognizing an intangible asset, it must meet the definition. Definition is it must be non-monetary, identifiable, non-physical, it should not be physical, and it must be separately identifiable. Then future economic benefits and cost must be measured reliably. So if these conditions are satisfied, we recognize intangible assets in the books, right? And this becomes very, very important, specifically in today's industry where a lot of thing is going around technology, web, app development, startup culture, where a lot of thing is focused on IT related aspects. Hence, this becomes more and more important. Now, when it comes to expenses on intangible asset or cost incurred on intangible asset, if it meets the recognition criteria, then the initial costs are capitalized. You will capitalize the initial cost, and the subsequent cost is generally charged to P&L. For example, I have developed a website. We have our website, we have our app, right? One by IndigoLearn. We have developed that app and website. The initial cost of developing the app, whatever was incurred, that we have capitalized. But the subsequent expenses, for example, user comes up and says, sir, we need emoji feature. So we added emoji feature. Or the user comes and says, sir, we need voice recording feature. Yes, it is under pipeline that, the faculty can add a voice note and respond to the students. So all the subsequent costs, we charge it off to P&L unless the extra benefit gives us additional future economic benefits. So if it gives us additional future benefits, if we can prove that yes, because of the subsequent cost, we are getting additional economic benefits, then we will capitalize, but normally we will charge it off to P&L. So very simple principle, initial cost capitalized, will come to research, development and all of that subsequently. Subsequent cost charged to P&L, or we will capitalize if it gives us additional benefit. Now, the same pattern of what we followed in Ind AS 16 and Ind AS 40 for capitalizing intangible asset. Of course, here you will not have present value of decommissioning and all of that because it is intangible asset. Largely purchase price, non-refundable taxes, installation cost, professional fees, borrowing cost, any other directly attributable cost. You'll reduce the grant and trade discount and other aspects. So same pattern, we have discussed one question in India's 16 as well. Similar approach can be followed in case of intangible asset also. Now, once the intangible asset is ready for its use, we will stop the capitalization. Now, so far, whatever discussion we had, these are basic discussion. I don't think you will have much doubt in this. Now, we'll move to specific aspects of, let's say goodwill, research and development, and other aspects of how do we recognize intangible asset. If there is any question, you can, definitely feel free to ask me. Now, coming to specific aspects of internally generated asset. Now, a lot of intangible assets, what happens is these are generated internally. Internally means the company itself generates. Now, over a period of time, as a business functions, it creates or it generates something called as goodwill. There is a goodwill for a business. Then, as it works, as it is, functioning, it would generate resources like customer list. For example, Facebook. Today, for Facebook, Instagram, and all of these social media platforms, customer is the most valuable asset. They have the customer data, they have what you see, they know which website are you browsing, they know which product are you looking at, they know what are you buying, what are your buying patterns. Everything is tracked, and that becomes the resource for Facebook or Instagram to show you ads. That's why you will always wonder, right? I check something on Amazon, and continuously across all social media platforms, you are getting ad related to that specific product. Now, when that happens, that is where they are building that resource, and for that they incur a huge amount of cost. Now, can we capitalize that? Can we capitalize that? All of those things is what we will be discussing. Okay. Now, first thing, goodwill. Very simple principle. No need to break our heads. We understood goodwill is not separable. Because goodwill is not separable, we will not be able to recognize it. Another reason is how much amount did we invest or how much amount did we incur to generate goodwill. That also cannot be determined clearly. You cannot measure it reliably. Then we cannot separate it from the business. You have not got it from a contractual right. So internally generated goodwill is not recognized. Internally generated goodwill is not recognized. Now the goodwill that we recognized should be either arising out of contract or arising out of contract, or it must be arising out of some legal right. Now that's where when you purchase a business, which we understand in India's 103 business combinations, there we will recognize goodwill, because there we can measure that value at least, that okay, the identifiable assets are so much, 100, we have paid 120, that extra 20 that we are paying is for goodwill. So when it comes to purchase goodwill, you will recognize, but when it comes to internally generated goodwill, you will not recognize it as an intangible asset. So it's very simple thing. Then similarly, internally generated brand. Today, OneFin has a brand, IndigoLearn has a brand. We will not capitalize it as a a brand intangible asset. But if you purchase a brand, we will definitely capitalize. The publishing titles, the mastheads, the customer list, and other items, they are not recognized as intangible asset. Now, customer list specifically, you need to understand that you cannot generally buy and sell customer list. If you can buy customer list and that customer list can be sold, then that's a different thing. But as per privacy laws and all of that, you cannot buy and sell customer list, right? And hence that cannot be separated, and you will not be able to recognize it as an intangible asset. And also, just because you have customer list may not, it may not be necessary that you will get future economic benefits. So in that case also, you will not recognize the intangible asset. So internally generated goodwill cannot be recognized. You will never recognize as an intangible asset in the balance sheet as per Ind AS 38. As per Ind AS 38. What Ind AS 103 says, that's a different thing. But as per Ind AS 38, you will never recognize. Now, apart from goodwill, if there is any other intangible asset, I told you, right? We have developed the app, then we develop a lot of content, then we invest a lot of amount in upgrading the app and all of that. So whenever there is an internally generated intangible asset, you classify that as research component or research phase and development phase. Research phase and development phase. The fundamental rule is research phase, when you are trying to find knowledge, when you are trying to discover knowledge, the commercial viability is not yet proven, okay, and you are just trying to see. For example, let's say during COVID times, they had to do a lot of research on finding out what is the best vaccination. Now you're doing research, you are experimenting. Now that experiment is not resulting in something which may be commercially viable. So anything that you incur when you are getting new knowledge, you're trying to figure out different alternatives. Till that time, whatever expenditure is incurred, that research expenditure is taken or charged to P&L. So always remember, research is charged to P&L. You cannot capitalize. Development is capitalized if 6 conditions are met. Now, what is the development phase? Development phase is when I have done the research, I have got some findings, I have got some result. Now, I'm thinking that yes, I can now design the product, I can construct the product, I can assemble the product, or I can use the research related findings to build something commercially viable, to take it to the next level, to start commercial production. When I'm reaching that particular phase, for example, COVID vaccination, a lot of research was done, some clinical trials were done. Finally, it was proven that yes, this vaccine is effective. Now I'm moving to the next step where I'm saying, okay, this vaccine is effective. Let me, assemble all the resources. Let me assemble all the facilities, and now let us start getting into the actual commercial usage of it, or commercial production part of it. Now we're moving to development phase. Whatever is the finding, now we are moving for, let us say, mass production, or whatever is the finding, for that we are going and registering a patent. Anything happening after research phase is the development phase, and in the development phase, what you do is, if these 6 conditions are met, if these 6 conditions are met, then you will recognize it as an intangible asset. Now, what are these 6 conditions? Very, very simple. First, you must have the technical feasibility to complete the asset and make it available for use or sale. So there must be technical feasibility. If it is feasible means it must be possible technically to complete the intangible asset. Second, there is technical feasibility. Not only that, the entity must have the intention to complete the intangible asset and use or sell it. So here also, if you see use or sale, here also if you see use or sell. So there must be technical feasibility. I have the relevant technology. I have the relevant requirements that is needed to complete the project. That must be there. I must have the intention. So first is the feasibility. Second is the intention. The third is the ability. I have the feasibility. I have the intention. I must also have the ability to use or sell it. Because only when you use or sell it, you will get future economic benefits, right? So the third part is, you must have, or the entity must have, the ability to use or sell the intangible asset. Then you must demonstrate probable future economic benefit. This is the basic criteria for recognizing any intangible asset. Then you must have adequate resources, money, manpower, to complete the development, and you must be able to measure the expenditure attributable to the intangible asset. So to quickly revise: technically feasible, intention to complete, ability to complete. Intention is I want to do, ability means I can do. Demonstrate the future economic benefits, adequate resources should be available, and you should be able to measure the expenditure attributable. Remember these 6 conditions. If all of these 6 conditions are satisfied, then you will capitalize the development cost for intangible asset. Now, if expense on research and development cannot be segregated, then you will expense it. Also, because these 6 conditions are not satisfied, and because of that you have expensed the cost on development. Subsequently, if the conditions are satisfied, you cannot say I'll reverse it. So once expensed is always expensed on intangible asset. So the cost till the research phase will be expensed. From when you recognize as an intangible asset, subsequently the cost will be capitalized till the time it is ready for use. Now what all will be include? Same thing. Material. Sir, why do we need material for intangible asset? For testing and all, you need material. So that is there. Cost of services, your employee cost, professional fees and all of that. Then legal expenses, other intangible asset, you have to file a patent application. All of this all of these are capitalized, then you may use other intangible assets for making the intangible asset ready for you. So I am using some other patent to develop my intangible asset, that also I will capitalize. What will I exclude? Again, the selling cost, the abnormal losses, the indirect cost, initial operating losses, inefficiency related losses, training. Once the software is built, you are spending some amount to train the employees, that also is not capitalized. So that is what is the overall summary of internally generated intangible asset. So broadly, create this picture in your mind. Goodwill, all never capitalize, internally generated. Same way, internally generated brand name, titles, and all of that, don't capitalize. Why? It is difficult to attribute the amount or cost that you have incurred. Measurement of cost becomes difficult. Then, when it comes to other intangible assets, research always expense, development capitalize if 6 conditions are met. 6 conditions. What are those 6 conditions? Number one, technical feasibility. Number two, intention, ability. You must have the relevant financial resources. You must demonstrate future economic benefits, and you must be able to measure the cost reliably. So that is how you capitalize and you work on intangible assets, internally generated goodwill and other assets. Now, intangible asset in exchange of non-monetary asset. Same logic what we learned in Index 16 also applies here. First, it must have commercial substance. If it has commercial substance, first thing, always, what we give, that is the amount we are paying to acquire the asset. So, can you measure the fair value of asset given up? Yes. So, measure it at fair value of asset given up. Can I measure it at fair value of asset given up? No. Then measure it using fair value of asset acquired. So, if you can measure it at fair value of asset acquired, okay. Otherwise, you will measure it at the carrying amount of asset given up. So, if I have something, I know the fair value of asset given up, recognize at that value. I don't know that, recognize at fair value of the other asset, or you will recognize it at the carrying amount. If it doesn't have your commercial substance, then you will always measure it at carrying amount of asset given up. So this chart, the other chart, similar chart what we have in Index 16 also, try to summarize it in your own words so that you can quickly refer to it before your exam, because here is where sometimes there can be confusion for the students. If you have any questions so far, please let me know, otherwise we will continue. Thanks, Rajita, for the confirmation. Thanks, Shruti. Thanks, Akshay. Thanks, Aisha. Okay. Now, moving on, some specific aspects again. Intangible assets in the form of government grant. Thanks, Hema. Hema Venkat, thanks. Intangible assets in the form of government grant means the government has given us grant. We'll understand this in more detail, government grants and all in Index 20. But whenever there is a government grant received, which is intangible assets from the government, if it is free, then we record it at nominal value, right? Or if it is even for nominal consideration, whenever we receive some amount, for example, for free or for nominal consideration, what we do is we'll record it at either the nominal value or the fair value. In asset related standards, we see fair value of asset given up, and in 115 we see fair value of asset acquired. Now the reason for that is, for example, I am selling. Okay, that's a very good aspect. I am selling. Okay, I am selling, let us say, property, plant and equipment, and you are buying property, plant and equipment. You gave me another asset. Okay, you give me another asset. Now for you, what is the consideration? What you are giving. For me, what is the consideration? What I am getting. So when I'm selling, I will see what I'm getting. As a seller, I will see how much did I charge from the customer. The asset that I gave me represents what we charge from the customer. But when you are buying, you will also see what I'm giving up, right? So that is the logic why, and it brings both of these into perfect alignment. So for example, you gave me a phone worth 10,000, okay, to access these lectures. And when you gave me the phone worth 10,000 to access these lectures, then for me, what did I get? 10,000. That becomes my consideration. That is my revenue. For you, what did you do? You gave me 10,000. That becomes your cost. I hope the logic is clear, Saisha. So in Index 16 and all of this, we are looking from buyer's perspective. In 115, we are looking from seller's perspective. Okay. Now, intangible asset, they are measured either at nominal value or fair value, depending on the accounting policy choice. And then we'll understand more about this in Index 20 when we discuss about that, on how do we account for it using this valuation, and where do we credit that and all of that. That will come subsequently. Then intangible assets in business combination. Now we'll understand Index 103. If there is any identifiable asset which is an intangible asset, it may be intangible asset under development also, or it may be internally generated intangible asset as well. If it can be separately identified, you will determine what is the value of that intangible asset, fair value, and that you will recognize as an intangible asset. And the balance amount, for example, as I told you, net assets are 100, amount we paid is 120. That extra 20 that we pay, that we say it is a goodwill. And you recognize goodwill in the consolidated financial statements as per Index 103. So when we go to Index 103, we'll understand how do we recognize intangible asset. Okay. Now, 2-3 things. Even if the seller has not recognized it as an intangible asset, for example, the seller is carrying out some research activity and they have not, or development activity, they have not recognized it as an intangible asset because the development did not meet the 6 conditions. I bought the business. When I bought the business, I also got that development intangible asset under development. Now the seller did not meet the criteria, but I as a buyer, I have the resources to complete the project. So what will I do? That intangible asset I will definitely recognize. Okay. So even if the asset was not recognized by the seller, we will recognize the intangible asset if we can determine the, if you can separately identify and determine the fair value. Even in process research and development project will be valued by the acquirer if it meets the definition of intangible asset and the asset is separately identifiable. So sometimes what happens is they will say, this is in development process, but the seller has not identified. The buyer can identify if they can measure the cost or the fair value and it meets the definition of the intangible asset. Then this rule, expenditure on intangible asset should be charged to statement of P&L subsequently. So once an intangible asset has been created, subsequent expenditure has to be charged as an expenditure. And once it is charged as an expenditure, you cannot reverse it. Once you have taken that, okay, for example, if you have already expensed one item, subsequently you cannot say, no, now it is meeting the recognition criteria, let me capitalize it. That all thing is not permitted. Once it is expensed, it is expensed. Now, some expenditure which are always expend P&L, research expenditure. When there is business combination, we'll understand separately. The fair value of that will be recognized as an intangible asset. Then establishment cost, incorporation cost. So a lot of time these confusions comes in the mind of students that preliminary expenses we have to capitalize. That will not be capitalized. Preliminary expenses will be expensed off. Okay, so that cannot be capitalized. Similarly, the training cost, advertisement, reorganization, relocation, all of these costs are expensed. Always spent. No need to break your head. The moment you see research expenditure, expense, except when it is a part of business combination. There we'll understand how do we measure the fair value and how do we recognize it, right? Then sales promotion expenses, reorganization, training cost, always expensed. Any questions so far? So whatever expenses are being incurred on intangible assets for goods, for example, you have paid some amount. Whenever you have the right to receive the goods, you will expense it off. And if it is for services, whenever you receive the services, you will expense it off. For example, for intangible asset maintenance, you are incurring some cost, maintenance of app. As and when the services are received, you will expense it off. It's a very simple discussion, nothing great. Now, like we have depreciation in case of tangible assets, we have amortization in case of intangible asset. We have amortization in case of intangible asset. So here also you will calculate the depreciable amount, and using the depreciable amount, you will systematically allocate that amount over the useful life. Now, residual value, if you see, generally it is assumed to be zero. Generally we'll see whenever you build something or whenever you acquire a license or something, generally the terminal value or the residual value is considered to be zero. But if there is a third party who has said, I will buy it after your after the period, let's say 5 years of useful life, or if there is an active market which exists for buying and selling such intangible asset, which is generally very rare, in such cases you will have the residual value calculated. Otherwise you will have residual value as zero. Now, for depreciation or amortization, one is what we need is residual value. The second thing what we need is the useful life. Now, useful life, what we have to understand is what is the life or what is the period over which we will get benefit from that intangible asset. For example, if I have a license, I may have a license for 5 years, and we estimate that we will get the benefit from that particular period for 5 years. But sometimes it may happen that the useful life may be indefinite. For example, just to give an hypothetical example, we believe our app has an indefinite useful life. It can be possible, right? Because we believe that this app will give us future economic benefits forever. Okay. Now, in that case, if it is finite, we can amortize it over the useful life. If it is 5 years, 6 years, or it could be sometimes a number of units produced also, or it could be sometimes based on output also. So is that life defined? The time period or the output, if that is defined or that can be measured, if it is finite, we will amortize. If it is indefinite, we do not know how long will we be able to get benefit from that intangible asset, or if there is an unlimited usage available, then in that case we say it has an indefinite useful life. Whenever it has an indefinite useful life, then you cannot amortize because you don't know the denominator. If you know the denominator, you can amortize. If you don't know the denominator, you cannot amortize. So we are saying finite, 5 years, 10 years. Indefinite, I'm not saying infinite, I'm saying indefinite. I cannot define the useful life. Amortization is not possible. If an intangible asset falls under the second category, there we will have to test these intangible assets for impairment under Ind AS 36. So when we go to Ind AS 36, at that point of time we will understand. So how do we determine the useful life? Based on usage. How much period are we expected to use? What is the product life cycle? 3 years, 5 years, 7 years? How quickly is the technology changing? And especially it becomes very, very important in today's time because of super fast changing technology. So that aspect you have to see. Then what is happening in the industry, how quickly the industry is changing, what is the competitor doing, then what are the maintenance expenses. See, what happens is if an asset requires a very high maintenance expense, then we will not want to use it subsequently. Okay, for example, a new car, just give me a new car, for the first 3-4 years the maintenance is lower, perfect, no problem. After the fourth or fifth year, we know that the maintenance will be very high. Then what we will say? After this has a life of 5 years, and after 5 years we will sell it. It doesn't mean that we have or we can use the car only for 5 years. I can use the car for 15 years. Even law permits me. But after 5 years or 7 years, I know that this car will cause trouble. There will be a lot of maintenance expenditure. So let me just sell it off. Okay. So those things have to be checked. Then for what period do we have control over the asset? And also the interdependence. Interdependence means I have an intangible asset. For example, I have a software. Okay. That software is used for production of videos. And I'm expecting to produce videos for the next 3 years only or next 5 years only. After that, even though I can use the software, I will not have use, because if I'm not generating videos, what is the use of the software? So based on that, we will decide. And these terms, no need to again remember by heart. Some 4 or 5 factors we can just casually browse through. May be helpful if at all a short note question comes up in the examination. Now, if there are contracts because of which we have got an intangible asset, for example, a telecom license. Telecom license, the government has said you can use it for 10 years. Actually, the license has, let us say, 15 years of useful life. But our contractual period is only 10 years. So my useful life cannot exceed the contractual period. My useful life cannot exceed the contractual period. So the useful life can never exceed the contractual period. And second, if my contractual period, my useful life is less than the contractual period, I will amortize it over the useful life only. So lower of useful life and contractual period. Lower of useful life and contractual period will be used to amortize the intangible asset. Then, for example, the government gave me a license for 5 years or 10 years. And the government said, after 10 years, by paying a nominal fee or by paying a very small amount or by paying a, let's say, 10% fee, I can renew it for another 5 years. Now I have to see, will I use it for 10 years or will I use it for 5 years? So accordingly, you will, calculate the useful life. If after 10 years, so first example that I gave you is, after 10 years, the government says you can renew it by paying a small nominal fee. By paying a small nominal fee. If I am paying a small nominal fee, I will consider that yes, the 10 years, when I estimate the life, I will say initially only it is 15 years. And the cost of renewal, I will expense it off. The cost of renewal, I will expense it off. Okay. But if it is a significant cost, 10 years license is 1 lakh. After 10 years, I have to pay 50,000 to renew it for 5 years. 10 years license is at 1 lakh. I have to pay 50,000 to renew it for another 5 years. So what the standard says is that renewal, treat it as if it is a new intangible asset because the renewal cost is significant. So if the cost of renewal is significant, you will consider it as a new intangible asset and you will treat it separately. It is like the change in scope or the increase in term and the price is commensurate or significant as compared to existing cost. If it is not significant, then initially only you will say, okay, you have to just pay, let us say 1% to renew. So you will take the life as 15 years and the initial cost will be amortized over 15 years. That renewal cost will be charged off to P&L. Then we understood useful life. Useful life, how do we estimate? If it is definite, we can amortize, or if it is finite, we can amortize. If it is indefinite, we cannot amortize. That we have understood. Then we also understood about the residual value. It has to be generally assumed to be 0. It has to be generally assumed to be 0, or if there is a third party commitment or if there is an active value, consider that. Now, when should we start amortization? When the asset is ready for use. Same principle we followed in day 16 also. When the asset is ready for use. Sir, we are not using the asset. Can we amortize? Yes, you should amortize. So the amortization is when the asset is ready for use. When should we stop the amortization? When it is either derecognized or when it is held for sale. So when it is either held for sale or when it is derecognized, you will stop the amortization. Now, how do we amortize or how do we do the depreciation part of it? Normally, straight line method is followed. But if the benefit that we get from the asset is different, the way we get the benefit from the asset is different, then you will have to use a separate pattern, or you will have to use a separate method. Okay, so generally you can use straight line method. If you feel that straight line method is not appropriate, you can use estimated units of production method, estimated units of production method, or you can use the WDV method, that is the diminishing balance method, as appropriate. If nothing is mentioned, you can follow the straight line method in the examination as well. Then we said unit of production means how many units is the output, or what is the number of units which is being produced. Okay, based on that you can amortize, but you cannot take the revenue. You cannot say that I will amortize the intangible asset based on revenue, because revenue depends on multiple parameters. The whole idea of this amortization is I am getting some benefits from the intangible asset. For example, I have a production license, or I have a patent, or I have a trademark, I have a technology for production. Best example to understand. The technology for production is my intangible asset. I am getting some benefit from that technology to produce. So that benefit I am consuming to get an output. So this is related. Now that output at what value will I sell is not directly related to usage of the intangible asset. Now that output, the revenue depends on the market price, price of the raw material, all of those things. So revenue should not be the criteria to amortize intangible asset. But there are two exceptions. One, the contract states that revenue is the limiting factor, or revenue has a high correlation with consumption factor. So if the usage has high correlation with the revenue, usage has high correlation with revenue. For example, whatever revenue you are generating, that purely reflects the consumption pattern, that properly reflects the consumption pattern, then in that case you can use revenue as a basis, or if revenue is the limiting factor. Now when we say revenue is the limiting factor, as per the contract, it restricts the revenue. So usage of, just a second, yeah. So revenue will not be the basis of determining the pattern of consumption. So revenue cannot be the basis for amortization. There are two exceptions. The first exception is it has a high correlation with the consumption pattern, or the contract states that revenue is the limiting factor. Now what is the meaning of revenue being the limiting factor? Let us say you can use the asset till the time you achieve revenue or sales of 10,000 units, or revenue of 1 crore. Till the time you have revenue of 1 crore, the contract says you can use this intangible asset, you can generate revenue up to 1 crore. But after that, the intangible asset cannot be used, right? So that is the basis on which we recognize, or we determine what is the amortization that has to be done. Then if intangible asset has indefinite useful life, then you will have to test it for impairment as per Ind AS 36. So as per Ind AS 36, you will have to test it for impairment, and normally as per Ind AS 36, we test for impairment when there are impairing conditions, or when there are indications of impairment. Whereas if it is an intangible asset with indefinite useful life, you will impair it annually. So if there is an indication, you will definitely review, but otherwise you will have to review, or you will have to check for impairment annually. Now why are we doing this? We are doing this because we are not amortizing the intangible asset. We are not amortizing the intangible asset. So the carrying amount of intangible asset may not be reflective of its recoverable amount. These terms may sound new to you for first timers, but when we go to Ind AS 36, we'll understand that in much more detail, right? So you will have to review what all: amortization method, residual value at the end of each year, useful life at the end of each year, and impairment at the end of each year for intangible assets with indefinite useful life. For intangible asset with finite useful life, you will have to check the residual value, useful life, and also the amortization method that has to be reviewed. Any questions so far? No. So WDV is not only dependent on wear and tear. What happens is, if you believe that initial period you will get higher benefits, subsequent period you will get lower benefits, then WDV is an appropriate measure. Okay, no more questions? Fine. Now moving on to subsequent measurement. If you have learned or if you have been with us in India 16, same logic. Initial measurement at cost, subsequent you can use the cost model or the revaluation model. Now you'll follow whatever we have learned in India 16 for revaluation model. Similar concept will apply here. Then revaluation model does not mean that previously if I have expensed an item and by applying the revaluation model I'll create that intangible asset. That cannot be done. For example, previously development phase, one of the conditions was not met. There was no technical feasibility or we didn't have resources, because of which we expensed it. Subsequently we got money. Now that doesn't mean that because I have not identified the asset now and subsequently we are saying that asset can be now measured or that asset will now be meeting the conditions, we cannot create a new asset by using the revaluation model. If an asset is existing, you can apply the revaluation model. And initial recognition of intangible asset has to be at cost only. It cannot be done using the revaluation model. Yeah, one more thing. This model, I think I missed out in day 16 also. It has to be done by class of assets. For example, if there is building, all the buildings, if you are following revaluation model for one building, all buildings should be under revaluation model. If you are doing for one particular type of plant and machinery, for all that category of plant and machinery, you have to follow the revaluation model. It has to be class by class. Now, for fair value, we will understand under Ind AS 113 that there has to be an active market. If active market is there, you can apply the revaluation model. If active market doesn't exist, and in most of the cases of intangible asset, it will be difficult to figure out the active market. For tangible assets like car, machinery and all of that, you may find a market. But for intangible assets, there will not be enough active market for you to determine the fair value. For example, I build an app. I may not find an active market to sell that app. So what you need to understand is, if the active market doesn't exist, you will not apply the revaluation model. You will carry it using the cost model only. If the active market existed, but now it doesn't exist, it ceases to exist, then use the latest revalued amount as the fair value and you need to check for impairment. This part we have already covered in Ind AS 16. You can follow the same logic: upward revaluation, downward revaluation, and if it is to quickly recap it for you, if there is an increase in value, so revaluation surplus under OCI. If there is decrease in value, P&L. Subsequent revaluation, you have to check earlier whether it was upward or downward. Earlier it was upward, now also it is upward, revaluation surplus. Earlier it was downward, now it is upward, first to P&L, then to revaluation surplus. Right? Then, if there is decrease in value, you will debit it to P&L. If earlier it was upward revaluation, then to the extent of amount you have in revaluation, debit that and close the account. Then de-recognition of intangible asset. Now, when should we de-recognize an intangible asset? You de-recognize an intangible asset when the entity believes or when the entity determines that future economic benefits would not flow to the entity. So, if future economic benefits flows to the entity, then you will recognize the intangible asset. If you say that I am not getting future economic benefits, then you will de-recognize the intangible asset, or if you have sold the asset. The difference between the carrying amount and the disposal proceeds is recognized in P&L. And if the intangible assets are sold and lease back, you will follow Ind AS 116 guidance. Otherwise, the gain or loss is recognized in P&L. Disclosures, you can have a look at it on your own. It is more of a self study. Now, lot of exclusions from Ind AS 38. First, inventory. Inventory means there can be an item which is an item of inventory, intangible asset, software and all that companies manufacture. Okay, those inventory items are covered under Ind AS 2. Deferred tax asset doesn't have physical substance, but that is covered by Ind AS 12. Leases aspect 116. Financial assets 32 and your 109, that is what covers it. Employee benefit assets Ind AS 19. Goodwill and business combination, very very important, Ind AS 103. Then intangible assets from insurance contract and deferred acquisition cost Ind AS 104, that is not there in our syllabus. Then non-current asset held for sale 105. Assets arising from contract with customers. So if there is a contract asset covered by Ind AS 115, we'll cover it there. And mineral oils and ores related aspects Ind AS Ind AS 106. And intangible asset arising from service concession arrangement, you will follow Ind AS 115 guidance. Any questions before we take up some specific questions from the material? No questions, Akshay. Others? Questions understood, not understood? Did you all have tea or coffee in the morning? Yes or no? Coffee. Akshay will have after the class. Now, Shruti and Sahasam says, understood. My question is tea or coffee? Coffee, good. I didn't have it. I'll have after the class, anyways. Coffee keeps me up morning and evening. But they also say, no, first thing in the morning should not be coffee. Empty stomach, caffeine is dangerous. Anyways, have it in moderation. That is okay, perfectly fine. So, a lot of coffee. Fine. So let's have a look at a few questions. So we have some time to discuss the questions and we'll discuss them. Expenditure, this is related to development phase. Expenditure on new production process year 1, year 2, 1st April to 31st December 2700. 1st January to 31st March, 900, total 3600. The production met the intangible asset recognition criteria for development on 1st of January of year 2. So, when did it meet? 1st of January of year 2. So, we have T also, Hema, Venkat. Good. The amount estimated to be recoverable from the process is 1000. Okay, so 1st January is when it meets the development criteria, which means how much amount should be spent or expensed to the P&L straight away? Then it says expenditure incurred for development process for FY year 2, year 3. So first year we have information of year 1, year 2. Year 2, year 3 is 6000. Asset was brought into use on 31st March of year 3 and is expected to be useful for 6 years. What is the carrying amount of intangible asset as at 31st March of year 2 and 31st March of year 3? Also determine the charge to P&L for year 1, 2. And 31st March of year 4, the estimated amount to be recoverable from the process is 5000. What is the carrying amount of intangible asset at 31st March of year 4 and the charge to P&L for year 3, year 4 on account of impairment loss? So many information is given here. Oh my god, coffee with ghee. How does it taste? Okay, so coming back to this particular question. Now, first thing you have to understand is whenever you see that there is an item in the research phase, there is an item in the research phase. So here, if you see this 2700 is fully for research phase. So research phase expense. 2700 will be expensed. Sir, what about 900? Development, capitalize. Even if it is not ready for use, what you will do is you will say intangible assets under development, and that 900 will be capitalized and shown in the balance sheet. So year 1 to P&L expense 2700, balance sheet intangible asset under development 900. Now the question says that the recoverable amount is 1000, means the recoverable amount is greater than the carrying amount. So as per Ind AS 36 there is no impairment, so that is okay. Now come to year 2, year 3. Now in year 2, year 3, what the question says is they have spent 6000. So expense on development 6000, right? They've said expense on development 6000 and that 6000 will be capitalized. So intangible asset will now be 6000 plus 900, 6900. 6000 current year, 900 previous year. Useful life 6 years. Now in year 3, did we use it? We didn't use it. In year 3, we didn't use it. So year 3 carrying amount will be 6900 only. Now in year 3, year 4, and what did they say here? They have not said the recoverable amount on that yet. Okay. In year 3, year 4, opening balance is 6900. Amortization 6900 by 6. So carrying amount 6900 minus 1150, 5750. On 31st March, recoverable amount is 5000. So if the recoverable amount is 5000, carrying amount is higher, there is impairment loss of 5750 minus 5750. So 750 is the amount is the impairment loss. This goes to P&L 1150 and this also goes to P&L 750. So the total amount that will be charged to P&L will be amortization and impairment loss. And the carrying amount for the balance sheet will be 5000 after impairment. Okay, now always remember before applying Ind AS 36 or Ind AS 105, you should calculate the amount as per the respective standard. Any questions? Okay, no questions. Ghee, coffee, tea, all of that is helping you understand it perfectly. Right. Now, let's have a look at this one. X Limited, engaged in the business of manufacturing fertilizers, entered into a technical collaboration agreement with a foreign company, Y Limited. As a result, Y Limited would provide technical know-how. Y Limited would provide technical know-how, enabling X Limited to manufacture fertilizer in a more efficient way. Okay, so you will be able to manufacture fertilizer in a more efficient way. X Limited paid 10 crores for use of know-how. Now, one small tip for you to save time in the examination, what I used to do is, so many zeros, no? I used to ignore, let us say, last 5 zeros. So, amount in lakhs, metric tons in thousands, because every time you write 000, that also takes time. So all of that you can avoid. Only for proper practice you can exclude those zeros. X Limited estimates the production of fertilizers as follows: year 1 50,000, year 2 70, year 3 1 lakh, 120, 110. At the end of first year, it achieves its target production. At the end of second year, 65,000 was being manufactured, and X Limited considers to revise the estimates for the next 3 years. Revised figures are 85, 105, 115 for 345. How will X Limited amortize the technical know-how fees? Now here, the estimation of production is given, and based on the estimate of production, we need to calculate what is the amortization to be done. Kind of question which has been tested, and we had this at intermediate also, nothing new, but still. Now how do we amortize it? Cost is how much? 10 crores. Cost is 10 crores, right? So I'll say 10,000 in lakhs. Output is how much in thousands, or this also I'll write in thousands only, otherwise there will be confusion. Output 1 2 3 4 5, 50 70 1 120 and 110. So see, 5 times 15 times you write 15 zeros and write less, you'll save some 10-15 seconds. So total of this is 450. Okay, now when you have to amortize, what you have to do is the total cost 1 lakh divided by total expected output 450, total cost 1 lakh divided by total expected output 450 multiplied by 50. So this is 111, okay, 11,111.11. This is 50 out of 450 into 1 lakh. Clear? So the first year depreciation or amortization is 11111. Now what happened? At the end of first year, it achieved its targeted production. At the end of second year, 65,000 tons of fertilizer was manufactured. So second year they did not achieve. They thought they will get 70. They got only 65. And subsequently they are saying now they will revise it to 85, 105, 115. So after year 1, year 2, 3, 4, 5. This is 65. 3, 4, 5. 85, 105, 115. So now this is the balance production. Now we have revised the estimate. Always remember, changes in estimate is prospective. So now we are expecting that we will get 370. Now what is the carrying amount at the end of year 1? Carrying amount is 1 lakh minus 11,111. Carrying amount is 88,888. Whatever is the carrying amount, that you will amortize it over the next 4 years based on the proportion of this. So depreciation or amortization will be 88,000 divided by 370 multiplied by 65. 15615. Then this divided by 370 into 85, 20420. Like this, you can do it for the remaining period. Sorry. You can do for the remaining periods 25,000 and 27,000. Okay, very simple, nothing complicated. The thing is, you have to practice more, and you also have to, what I would also suggest is, go through all the examples in the study material. Okay, examples related to self-acquired, self-constructed, customer list, and all of that. For customer list, one thing you have to keep in mind is, internally generated customer list cannot be recognized as an intangible asset. If you have purchased it, then you can recognize it as an intangible asset. If you can establish that there is a future economic benefit. X Pharmaceutical Limited seeks your opinion on the following transactions. First one, acquired a 4-year license to manufacture a specialized drug at a cost of 1 crore. At the start of the year, production commenced immediately. Now, you have acquired a drug license. When at what value? 1 crore. So, what you should do? You should recognize that because it is separately identifiable, production has started, which also means that there will be future economic benefits. Hence, you will recognize the license at 1 crore. Then, also purchased another company at the start of the year. As a part of acquisition, X Pharmacy Limited acquired brand with a fair value of 3 crores, and the life of the brand is 15 years. Now, when you have purchased or when you have acquired a business, please remember, we'll understand this in Ind AS 103 also. Whatever is separately identifiable, that you will recognize as an intangible asset. So here the question says, you have recognized our brand value of 3 crores can be separately identifiable. That is having a life of 15 years. So you should recognize the brand at 3 crores and amortize it over a 15-year period. Then, very important, this happens also in your day-to-day life, also in practical life also you would see, because we have been learning deferred revenue expenditure and all of those aspects, that actually concept doesn't exist. Spend 1 crore on advertising campaign during the first 6 months. Subsequent sales have shown significant improvement and it is expected to continue for 3 years. Please remember, by incurring advertisement expenditure, there is nothing which is separately identifiable that you have created. By incurring expenditure on advertisement, you have created maybe goodwill, you have created maybe your brand value, but you have not created any identifiable intangible asset. So that amount that you have spent on advertising campaign, that should not be capitalized. There is no identifiable asset. You cannot measure the future economic benefits. You do not have control on any other specific asset. Even if you get customers, you don't have control on them. Hence, you cannot capitalize. These are more like brand building activity, goodwill generation activity. So you will not capitalize. Then it has commenced a developing a new drug A. The project will cost 10 crores. Clinical trial proved successful and the drug is expected to generate revenue over the next 5 years. Cost incurred till 31st March 5 crores. Balance cost to be incurred 5 crores. Right? Now, in that case, it has already proven that there is a clinical trial, then development has been established. So 5 crore plus 5 crore, 10 crore should be the value of the asset. It has also commenced developing another product, drug B. It has incurred 50,000 towards research. The technological feasibility has not been established. So if it has not been established, then you should expense it off immediately. Now, sometimes the questions may ask or questions may test in the examination that, we have incurred huge cost on training employees. We have paid huge amount in, getting the employees on board. Employees will stay with us for a long period of time. Such cost cannot be capitalized. Such cost cannot be capitalized because you don't have control over the employees. Same way, if you train an employees, cannot capitalize. But for example, I enter into a contract with MS Dhoni for IPL franchise. There, I am retaining him. I have a right to use him as a player. I can restrict him from not playing anywhere else. Then in that case, I can recognize that amount as an intangible asset. Of course, if it has a more than 1 year thing, otherwise it will be expensed off in the same year. Now with this, we come to the conclusion of Ind-AS 38. The reason, as I told you, we took this smaller standards in between was to ensure that we have that gap where you can feel a balance. Otherwise, all heavy standards you will start getting scared. These are all simple standards which you have already done it in the past as well. And with this, we have completed in days 116, 115, 16, 38, and 40. So I am running short. Yesterday some disturbance, today some disturbance. 20 will not take much of a time, so I'll maybe push 20 down somewhere later and continue with in days 36. Okay, so here I'll maybe after in days 2 and 41 I can add 40 here. One more there. Okay, so we have completed this. Good amount of coverage in terms of marks also. 36 and 105 also becomes very, very important. And then we move to the heaviest standards, that is financial instruments, business combination, and consolidation. Okay, any questions? I am here. Otherwise, we'll call it today. Please ensure two things you have to ensure, every one of you who are attending, taking time out, coming up 5:30 every day. Complete illustrations and examples on the same day. It will not take much of time. Another 1.5 hour if you spend in completing the questions and answers from study material or RTP or past exam papers, you will have a very, very good grip over the subject, and you'll be well prepared for the examination. Okay, chalo, any questions, or otherwise we'll conclude it. Thanks a lot, and we'll see you tomorrow with Ind-AS 36.